We all know the last 2 years of real estate has been crazy, for lack of a better word. Prices have shot up, inventory has gone down, and rates have been all over the place. In this video, I wanted to provide an overview on what's happened in the Charleston real estate market in 2022 and what we might expect to happen in 2023. I'll be going through a lot of numbers, so if you'd rather just hear the summary and predictions, feel free to skip to the end. So let's dig in. First of all, I am not an economist and I don't have a crystal ball for the future, but I can provide data from economists and look at some of the trends I'm seeing. Thank you to the Charleston Multiple Listing Service for their annual report, which I'll be referencing a lot in this video, and to Dr. Joey Von Nessen, an economist at the University of South Carolina School of Business, for his recent presentation to the Charleston Trident Association of Realtors. I'll be referencing his slides in this video as well. His presentation was an hour long, so I'll be summarizing my takeaways, but I will leave a link in the description below so you can watch the whole thing if you want to. So what happened in 2022 in Charleston? New listings were down by 8.4% compared to 2021, with 23,700 new listings. This is likely due to the rise in interest rates, as a lot of sellers did not want to give up their low interest rates in order to buy a new house with increased prices as well. Pending and closed sales were also down by quite a substantial number, with pending sales down 20.4% and closed sales down almost 18% compared to 2021. However, if you look at the historical data, closed sales were actually higher in 2022 than before 2020, which shows that demand for homes in Charleston is still trending up overall. Inventory of homes for sale at the end of the year was up by 62%, likely due to the rise in interest rates causing a cool down of the market. But again, if you look at the years prior to COVID, inventory was still way higher then, so we are still nowhere near the inventory of a healthy market. Now for the number everyone is probably most interested in. The median sales price in 2022 was $398,600, up 13.9% from 2021 and up a whopping 42.8% compared to 2018. The average sales price is up by about the same margin, with an average of $551,000 and up 13.2% since 2021. To dive into this data further, the median sales price of a single-family home in Charleston is $420,000, up 12%, and of townhomes and condos, it was $330,000, which is up 22.2% compared to 2021. Days on market until sale was actually down, with 20 days on market being the average, down 13% compared to the year before, and down 67% since 2020. Percent of original list price received is also a good indicator of demand, and it was at 99%, which was not too far off from 2021, and shows that it is still far from a total buyer's market. Another interesting statistic is the top 10 areas for market share in Charleston. Downtown Charleston had the highest market share of townhomes and condos, followed by Kiowa and Seabrook, and for single-family homes, Goose Creek/Monk's Corner, Hanahan, and the greater Somerville area had the highest market share, which doesn't surprise me as many buyers are looking in those areas for more affordable housing in the region. New construction has been a sector of the real estate market that plays a big role in the supply and demand. As stated by this report, builders faced cost increases, material availability issues, and a limited labor pool, but decreasing lumber costs helped offset these issues. Builders responded to the declines in buyer activity by reducing their pace of construction, which will not help to resolve the long-term trend of an undersupply of total housing units. As I've mentioned in previous market updates, building in the U.S. has been at record lows since the 2008 crash, and now we are running into this problem of a housing shortage, which is one of the reasons prices have gone up so much. Goose Creek, Monk's Corner, Johns Island, and the greater Somerville area had the highest levels of new construction in the area, and if you've driven through these areas lately, you will know that for a fact. Now let's look at distressed homes, which means homes that are in foreclosure. This is also an indicator that even during this recession, it is nothing like 2008. Only 0.6% of closed sales in 2022 for Charleston were distressed, and the prices of short sales and foreclosures are still up substantially compared to 2018 by 17.5%. The median number of showings before an offer was accepted was 10, which was the same as 2021, but showings decreased throughout the year in 2022. I won't go too in-depth with this page as it is a lot of numbers, but if you're curious how each area of Charleston compares, this is very helpful. Charleston County had the largest decrease in closed sales compared to the neighboring counties, and my guess is that this has to do with pricing. This chart is also really interesting as it shows the area's historical median prices. No surprise here, prices all around have gone up by 50% or more since 2018. That's all for this report, so now I want to talk a little more big picture with the South Carolina and United States economy with Dr. Joey Von Nessen's presentation. With the past 2 years being such a wild ride for real estate and the economy, the data is showing that we are finally entering what would be considered a normal, healthy market for real estate. And this economist is calling 2023 the year of readjustment for supply and demand. The imbalance we've had of supply and demand has led to a high rate of inflation, which the Federal Reserve has tried to reverse with their rate hikes. The strategy has been working, and inflation is decreasing slowly but surely. This graph shows the U.S. inflation rate year over year, and U.S. core inflation, thankfully, is going back down. The Federal Reserve has stated that getting inflation under control is still their highest priority, but most of the rate hikes have already been implemented, with rates only projected to rise by another 50 basis points in 2023. These interest rate hikes are affecting the housing market directly by decreasing sales due to housing affordability, and they can affect the housing market indirectly by reducing overall sales due to any increases in unemployment. However, South Carolina's employment levels are looking very strong. South Carolina employment is already 2.2% above pre-pandemic levels, and employment has recovered since COVID in almost every sector. This employment rate is actually below the average non-recession rate of employment at only 3.3%. Of South Carolina cities, the Charleston employment level has fared the best. The data is also showing that more and more people are moving to the Southeast United States, with South Carolina being one of the top states for relocation. This will also keep the job market and housing market strong. And for this reason alone, I would not expect prices to dive in the Charleston area. To summarize all of this, throughout 2022, interest rates went up, purchasing power went down, and there was a cool down of the market with less sales overall. As rates have leveled out a bit, we are starting to see the market pick back up at a more normal pace than the last 2 years. The growth rate now is closer to the historic trend of a more sustainable level of growth of 2.2% year over year. The South Carolina and U.S. economies have rebounded from the pandemic-reduced recession, and we are in a strong position. High inflation still is a threat to the economy, and most economists estimate that there will be a recession within the next 12 months, but that it will most likely be mild. The prevalent labor shortage will help limit any negative impacts to the job market and therefore to the housing market. However, if we do see the labor market weaken and unemployment start to rise, housing demand will pull back more. So, do I think the real estate market is going to crash? Based on the data, no, I don't, and especially not for Charleston. Here's why. Demand is still very strong for housing, with many first-time homebuyers and investors entering the market. Secondly, South Carolina will continue to be a top state for relocation, and unemployment here is very low. Inventory will continue to be low due to a building shortage since 2008, and because sellers won't want to give up their low interest rates. Also, rates are already starting to level out and may go back down. Lastly, lending guidelines are more strict than ever, and most homeowners have equity if they do need to sell, so we should not expect to see a lot of foreclosures. If you're trying to figure out whether to buy or sell in 2023, my advice is always to do what's best for your situation instead of trying to time the market. It's also a good idea to look at the bigger picture. Rates really aren't that high compared to historic trends, and if they do go back down, homeowners can refinance into a lower rate, whereas rent has steadily increased year over year even through previous recessions. That was a lot of numbers, so if you're still watching, I really do appreciate it, and I hope you learned something. Stay tuned for more fun Charleston content, and I hope your year is off to a great start.